So it's a matter of like, okay, here's one, two, that's your third three versus one, 161.8, which we already passed long time ago. Here's your 200% is a 63.56. So are we gonna get there? I don't know. So it's just a matter of like, where are we gonna see some sort of a weakness? So the first test for a support for any kind of a dip, that would be this major support right there, which is going to be this prior high of whatever this February high. So from here, it depends. We just crawl right back up, or if we're starting to see couple intraday closes below this level, there's going to be a very good chance that this fourth wave is going to start coming into a play. Until then, just gotta have to leave it open up on a chart. There's nothing you can do there, So this is the this is where the whatever the 22% decline that we had, right? Yeah, 27 from peak to trough. So this is where we at. Going to accuse. Now Q's already sitting at 200% at three versus one. So and it's been struggling. It it was here the week before. You see the high the 557. Geez, cannot even talk. 557 got a bit of a dip right there. Went right back up. Look at the high here, 557.63. So this is, I always tell you guys, this is not an easy one to break. This is a very strong fib. You could poke above like a day or two, but most of the time, price gonna start. It's gonna take a pause. It's gonna take a pause, or it's gonna start backing off. So we're right here at this, and which at this I've been watching this since last week, and I was like, okay, here comes the first test. We backed off. Then we made another attempt back, and we're just kind of, as you can see, like it is struggling, since last week. So if you look at the price action from here, from this part right there for the last 2 weeks, is it's first, it's a very narrow range. And on top of it is just this 200% is holding. I mean, if it's going to push, get a one more push to the upside, I mean, the upside is right here is 569. So there's a plus you have about 261.8, 61.8, and 200. This 557, 558 area is a very sticky area. Okay, so just keep a good eye on this one. So great. It's 30% tariff on EU and Mexico. Man, this guy is out of his mind every single day. So this is where we at on Qs. Now we go back to Tesla. Tesla fired a buy signal yesterday. Okay. So the signal had a clear, it has the invalidation. It's at 293.55. So we're going to use the same 293.55 here as a wave count invalidation. Okay. So we're going to use the buy signal stop loss to the same invalidation here on a wave count. So this is the low 273. From 273, we can clearly count five waves up. So if we have five up, this is three down. This three waves down is right at that 78.6, literally a textbook print. As you can see, the low here is 288.77, 78.6 for the 289. So this is always going to be your last resort before this low is going to get is going to get taken out. So a lot of institutional stops buying starts here at this zone, so seller is always going to try to push this thing down, and the buyer is going to step in here at 7-8 points. He's trying to see if he can rebound the price. Anyhow, so if we have 5 waves up along with 3 waves from here, we should expect at least another 5 waves up. So we're just gonna play a counter trend move from this low. I'm not worried about anything in the back because on a higher time frame, Tesla is a complete mess. Okay. There is absolutely not a chance that you can count this thing anyways. Okay, as like a clear 8 swings off the low from any low. It doesn't matter. Okay, you take this low. Okay, you can squeeze. This is a 3-way move. Okay, this is not called, you cannot, you can call a 5-way move. So there's no trend from any low starts with a 3-way move. Okay, you need 5, and then your counter trend has to be 3. So that makes total 8 swings. So from 8, then you're looking for a higher high to take out the where you completed the first 5 waves. So in this case here, if you look at the bigger time frame, it's like a bunch of 3 waves. 3 here, 3 down, 3 up, 3 down. I am 95% confidence. Okay, I have them that this is the ending diagonal of a one larger degree off all the way from here for $1. Okay, this is wave 1, down in 2, up in 3. Okay, so you have 1, 2, 3, 4, 5, and then from here, this is your fourth wave. The fourth wave, the 101 price. That's when Tesla was down when he was buying Twitter. Ever since, from this price, okay, these are all 3-3 move. The only way you can make this count aggressive, okay, if you turn this thing into a triangle, which you can do that, okay. Oh yeah, once it's gonna complete 5 way, you're gonna see a larger one, ABC correction all the way down. So this is a weekly time frame, so you have to keep that thing in mind. Each bar is 1 week long, so it's a very long time frame. Okay, just always look at the wave count in a bigger time frame, and then you try to see what you can make out of in a smaller time frame. So now, this is a case if it is an ending diagonal here. It looks like it. Okay, if we turn this into a triangle instead of starting from here, we make this thing as a triangle, which you can. Okay, now this is a little bit more aggressive. It's the same thing, starting from here, all the way from here, $1. It goes up 1, 2, up in 3, which is 3 versus 1. You see, almost a textbook print, 365. And then from here, instead of, because the other count is starting like this. Now, in this case, it goes into a triangle, as you can see. This is both counts are valid. But this one is more aggressive, okay? Meaning that the fourth wave, instead of ending here, it ends here by making a triangulation. From here, we had a higher high, right? So we can count, this is 5 waves here. From 5 waves, we could count this thing as a whatever. You can put WXY, you can put a triple combination. It really doesn't matter. So we came all the way back down here toward the 2 versus 1, which is again back to 224 area, which is 78.6. The low was at 214. Okay. And now from here, what you're looking for is looking for a third of a third breakout. Okay. So this wave right there is some sort of a complex too. So we have 5 waves up here. Okay. Off from this low from 214. This is the counter trend move. And now from here, Tesla should take off to the upside. Now that again, that will take a long time because these are weekly bars. This is a very long-term time, but this is a very aggressive wave count, but it's a valid count. There's absolutely nothing wrong with that thing. But in order to make a case for price to go up to 500, 6, 800,000, the fundamentals has to improve. Okay. They have to they have to show strong earnings. I know they have a bunch of stuff, whatever they have coming up. So if you believe on a Tesla strong fundamental thinking that the company will turn around eventually, that he's going to stop fighting this and that, and he's going to, and things will turn around for Tesla. If you believe that, okay, this is the count that can come into a play in the near future. Again, this is not something that we're looking that thing is going to happen in 1 year. This can last several years, but because you're looking at a weekly time frame, each bar is one single week. Okay, so you're looking at, let's suppose from here you're looking at July all the way down here till April. So that's a lot of time. Okay, so these are not the ones that you can buy options leaps. These are like if you're a shareholder, if you have enough patience, if you believe on the company, if you think the fundamental will turns around, they're gonna start reporting some blowout quarters, start giving out guidance. These kind of things will starting to, if you factor those things, if you think that way, okay, if you believe on that company, then for a shareholder, this is your long-term picture. If you just wanted to take a counter trend moves, well, then you have to play with the options side and just gonna keep chopping around. Shorter time horizon, the any kind of a wave count is a complete mess. Okay, I've tried it, I counted it. If I cannot count it, if I cannot get a clear read on a price, I don't think anybody can. So let's say let's see right now if this is some sort of a complex or could be running flat, either or, it doesn't really matter. Okay, as long as this goes as a 1-2, now we have a buy signal on a daily time frame. Let's see how that thing plays out. I know they have earnings coming out pretty quick in the next, I believe, 2 weeks. So I don't expect the stock to make a wild move before earnings. Usually most of the stocks takes a pause, you know, and some of them are starting to make a mean reversion back. So the stocks, they already had quite a bit of run. So they right as when they're getting close to the earnings, they're just trying to make a mean reversion back to it and just wait for, let's see what the company says and how they report their earnings. So anyhow, this is the pretty aggressive wave count. Okay, in this case right there, we have a high here of 414, right? So from 414, which was this October 30th of 2021 high, and then from here we end up made a new all-time high at 488. That is the high of Tesla. If Tesla from here starting to move, okay, this you're looking at a third off a third, okay, upside. So I had everything here. So I have 78.6, which is 409, 78.6, 100% projection, okay, 575. That if we're gonna end up if the price makes a higher high above 488, 127,611. Then these are the 61.8, 3 versus 1, 200, 3 versus 1, way down there from, where we started from a dollar price. Then we have the 1, 2 is at 1434, which is 3 versus 1. So this is what you call an ideal target, the Elliott wave golden ratio of 3 versus 1. So this is, I mean, people can have their opinions. Some things that the stock is going back to 100, but that's all speculation. But just to paint a picture on a bigger time scale, if he behaves, don't pick a fight, here and there. I mean, if company can start to think, change, turn things around, well, this is your bigger picture. If this is not the case, okay, regardless if it goes as a 1-2 into a third, or if it goes up here as an ABC up in 5, stock has an upside. It has one more push one way or another. Okay, so both way counts, regardless if you count from here or you count from here, okay, by making a triangle, it has one more push. Okay, so you can either start from here or you can start from here. So if you start from here, you still need to complete fifth wave. If we go back to the other side by making a 1-2 count, it still goes up in a third wave. Okay, so it has a push to the upside. It's gonna torture everyone as always. It's a volatile stock. It's gonna test everyone's nerves, and is gonna trap all the all the puts on one side. It's gonna pull the rug pull. Same thing up on the top. All the calls gonna be in. That's it. Reverses right back down. It has a pretty well-defined looks for a triangle, to be honest. So, well, sorry, the diagonal. So we'll see what happens. Okay. The best way to look at this entire thing, is right there. Okay. I posted this thing on a Twitter as well. Right here. Okay. This is a really good chart. We're not talking about wave count, making a triangle, this and this. We're simply going to take the same price from 101. Okay. So we'd make a same triangle to here, to this low of 180. Okay. By going this way, like this. Right. Or we're just going to take this low. So what happens here from this low, you had a first swing. Here comes your retracement, higher low, 30%. From 30%, this high right there, which was 217, took 16 weeks. Okay. Meaning that price came down another week 3, 4, 5. See, these are weekly bars. So you have to count all these bars from here to back to here is 16 weeks. So from 16 weeks, it got the breakout. It went straight into this green zone. That's the target zone. Remember the rule. We buy in a yellow zone, we target the green zone. Okay, against this low. Okay. Now coming down. So this is the first swing, took 16 weeks for this breakout, right? Back to the green. Now we're going to take 299 price. Now we're going to take a first swing down to 191. Now we're going to draw the same yellow zone against this down to the green zone. Okay. So you're just trading back and forth. That's what these are swing trading. Now we're going to mark this low. Okay. Rally back up. 95% off this low. Came back down to the yellow zone. Okay. 32%. This time was 30%. Now from this high to this high, 16 weeks again. So now these two corrections right there, the counter trend move matches exactly to the time. As you can see, the 16-week breakouts both times. So came back right down in the yellow zone, and where the price went, right back to the green zone. It managed to push even higher, but that's the target zone. So what do you draw? So what you're looking for here is you're looking at yellow to green, yellow to green, yellow to green. Now what we're going to do is we're going to take this low, which is this 214. Now we have the initial push right there of 71%. Now we're down to the yellow zone again. The yellow zone this time was 25%. Remember the last time was 32. The very first one was 30. So they're very close, as you can see. So where we have our yellow zone now? Here. Okay. So the price came back down. What was the low? 272.87. That's the low right there. Okay. So from here, we're trying to bounce. But now, according to the time, it's not completed until September 19th. Why is that? Because we need to watch if it's going to repeat again. Because these are identical 16 weeks breakout for a higher swing. This one, starting from this high until here, is September 19th by Friday. Can the breakout happens before? Absolutely. We don't know that. Okay. But can Tesla just do the same thing like this? You see, it makes initial move, goes all the way back up, and then come back down. Not all the way here, like somewhere around here. Hang on. Let's see. Watch these ones, okay? Back to this. Bounce, higher low, down, then you gotta push. But it's basically what it is just completing these 16 bars on the clock. This one, and the first initial push, lower high, lower low, end up making a higher high. Took 16 weeks. Where we at now is first push, rallied back up, lower high, same thing like this one, same thing like this one, went back down again. That's where he just picked the fight like this, as you can see. Okay. But according to the time, it's not completed yet. We have a lot of time to go. Okay. So now we're going to keep our finger crossed that if a buy signal holds on a daily, and if the price managed to go like this, that's good. I mean, not all the way here. Sorry. Before September 19, okay, we're good. The point is, the only way we're going to confirm this when Tesla's going to break this high. If the price breaks this 367 before the September 19th, meaning that the time is not, so that meaning that this counter trend move is going to be shorter in time compared to these two. So your time relation confirmation for a higher swing, because this is the higher low that we're dealing right now against this low, is this 367. Okay. So from 313 to 367, this will give you the confirmation of the time. I just left this 16 for a reason, is because it has happened twice before. Okay. So this is the third attempt that we're trying to make. Are we going to choose 16 weeks on a clock? So we're talking sitting here in this for let's see how many more weeks. So from here, which is this week, 10 more weeks. Okay. So are we going to just sit around in this area for 10 weeks more, we're gonna find out. Okay, so we're gonna keep an eye on it every week. I'll just, a matter of fact, I'll just change it like this, and we just count it. Next week is gonna go by. We're gonna have one more. So we're gonna make it to 9 weeks. So we're just gonna calculate the remaining time from here. Okay, so we'll see what happens. For now is 10. Okay, so we already um spent 6 weeks already. We have 10 to go to match these two. If the price managed to break above 367 before the 10 week, it can happen in the next 2 weeks. It can happen Monday. Who knows? Okay, then we just remove this one. I'll move this thing here. We just target the green zone. We're just gonna this is the target zone. Okay, regardless, but this high needs to break. So we're just gonna repeat the same exact swing over and over again. Up, yellow, target. Down, yellow, green. First swing, yellow zone, green zone. First swing, yellow zone, now the green zone. That's it. We just keep repeating these swings over and over again. Okay. If you look at the price structure overall, the price is actually making higher highs and higher lows. Okay. The bigger time frame is a mess, but it's not technically it's not bearish. We're not doing this. Okay. I mean, the price is making higher high against all of these. This is a swing down. You see? I mean, the price is, but we'll see what happens. Okay. So
So Mo, after this 16-week cycle is completed, how many weeks on average did it take to top?
it varies. I mean, because Tesla, like if you look at the range here, it was 96%. This one was 168%. So we don't know. The upside is always a challenging. You see, like because Tesla one, this is the thing about Tesla stock, because once it runs, it's not gonna give nobody any chance. Okay, look at this, all higher bars. Like these ones here. See, they're all higher weekly. But how are you gonna get in these trades? You don't even have a single down week. Like here, like once you look at this breakout here on this candle, look at the size of this weekly candle. Pull back, look. That's the thing. Your retracement is going to be so shallow. Because that's the thing about Tesla stock, because it's so damn volatile. Once it goes, it goes. Then people are like, oh, I wish I would have bought something at 300, or now I want to chase them at 450. Well, there's going to be tons of them. They're going to be, oh, should I buy now? It's like, well, you were sleeping when I was at 300. Like, it's a matter of waiting and just taking a bit of a punishment. I mean, believe it or not, like if you were ask me, I'd rather buy shares over fight my life over options. I don't know. I mean, I love to trade, don't get me wrong. I love like options and stuff, but I hate trading options. It's just the word cheap money is just doesn't uh, gives me that, like like oh, I want to have I have a $10,000 account from that buying $1,000, $1,500 worth of a premium. I'm gonna just turn that thing into a $50,000 gold pot. I just don't have that kind of a mindset. It's not how like you want to start a business and like, oh, I want to put a $50,000, but I'm gonna turn this thing into $100 million company. I mean, oh, it has to be something really damn good. I mean, some businesses they require some capital, and It's like a same kind of, approach when it comes to trading as well. It just whatever. Um, MSTR was good, starting to move. Um, it was looking for a new high when end up, we did end up making one, likely above this 430. So our signal and validation still at 372, still has a buy signal in there. It got the false, not false, it got hit with a sell signal. I exited the trade on the option side, so I still have shares, so I'm just gonna hang on to those ones. Any upside that comes in play, I'll just take with those. So is that a trade was still a decent trade, but it just can you like really left a little bit of room, not as much, which I'll show you. So this is where we at. So here we are, 1 2 here. Now we go 1 2 3 4 5. Okay, so the prior resistance was at 430, 78.6, 452. So this is going to be a very sticky zone. Okay, so you got to watch this number. 3 versus 1, 1 2 3 versus 1, 457. So now you're starting to see there's a cluster of fibs, especially these two. 161.8 from here, 78.6 from an all-time high down to 235, 78.6 at 452. If this zone, I don't think you're gonna clear that easily. We're gonna be due for some sort of a fourth wave. If this fourth wave will set back, we'll give a push right back to the upside to complete one higher degree, which is wave one. Okay. So we'll just need to count 5 because this is a correction, right? 5 up, 3 down, 5 up, 3 down, another 5 up. Okay. That's what Elliott wave is. A repeating pattern. Okay. So we're doing exactly the same. So we'll see how the price progress from here, and we'll just keep going and just keep counting 5 3 5 3 5 3. I didn't project anything that far, but there's no point for it if we need to go with one standard deviation moves. Okay. So I was literally embarrassed yesterday. I asked him a simple question. Do you understand what standard deviation is? He's like, no. I Instead of sitting chasing and gambling all day, why don't you read over the weekend? It's gonna help you understand the market, the price, your trading price, learn how to read price, what the price will actually do if the trade goes up or either goes down, you know? So let's do, oh boy, I don't have that much, 20 minutes left. I have to cut off at 9, so I gotta put stuff away. So what are we gonna do here? Let's go to the signals because I wanna talk about this is good. Daily time frame, all swings are up. Okay, as you can see across the board, there's nothing bearish about the market. Okay, can we set back? Of course we can. Are we due for some sort of a setback? Yes, we are. But if you look at the mass market, it's super strong. Okay, I mean, look at this. Like, this is the week that just went by. As a matter of fact, like this was yesterday, a day before, like 1 2 3 4 5. Now look at these 5 bars for this week, just literally sideways. So don't expect that. Remember the rule, how the price goes: accumulation, distribution phase, and then what happens next? Market has 2 phases: accumulation, distribution. Now the question is that if you have accumulation and the price goes sideways, which you have, which we just spent the entire week here, as you can see, can the price goes back like this? Of course it can, but that doesn't mean that you're gonna come down like this. I mean, it can happen, but if there's a catalyst or any kind of a massive spike in volatility, yeah, I mean, but we made a V. I mean, we're not making another W or V or whatever what I want to call it. I think it's a typical price action, accumulation, distribution phase. Next week, earnings are starting. All the Dow 30 is going to start reporting, starting JP Morgan, always going to start the show first. Goldman Sachs, financial is going to come first. That's where the Dow is waiting right now in the distribution phase. Okay, waiting for those earnings to start coming into a play next week. And then we'll see what happens, which passes, which fails, what they say, but everybody had a mixed view about economy. These tariffs is going to turn everything down upside down. But looking at the market, none of these tariffs did. The first initial sell-off that we just had this year was all based on fear, but in the end, look where we at now. Yeah, it's one of the fastest rebound in the history of stock market, there's no doubt, but at the same time, we're just not gonna we're just not gonna keep going up forever either. You all know that, right? Same thing here. Q's just you see like the week that we just had is just literally sideways. All the price action you see here is the same way. See, all the way just last 6 days. It's just literally sideways. Market just taking a market just buying time going into earnings. Okay, and the next 3 weeks will be a pure earning deliver. It's going to be a pure earning driven market. Just keep that thing in mind. So it means you have to be very selective with stocks. Okay, you have to try to make sure we're gonna pick the right horse to put a bet on, because any big company like I don't know, but like JP Morgan Chase or a Goldman Sachs, like if these stocks can hit, it's gonna shake the entire financial sector. I mean, you have to remember the website I told you about, the SPDR. Any stock that has the most weight on the sector is gonna take a hit. It's gonna drag the entire sector down. Okay, so at the same time, now let's say you could be sitting in a let's say a PNC stock bank, and then a JP Morgan takes a hit. What do you think the rest of the financial institute is going to do? So you have to keep that thing in mind. I always watch the leaders, because because I literally believe they're the one that drives the market, which you all know that, right? So it's my focus every single day is on 50 stocks. Okay, that's what I track every single day, which is these ones. Russell Top 50 Index. Okay, the biggest 50 companies, market cap companies. Then from there, I can go up to 100. So then I'll just add, so these 50 stays as is. On top of it, you can add 50 more. So I always have my eyes around, but I don't like, now if we're talking about mid cap stock like Abercrombie and all the other ones and stuff, I'll look at them and stuff, but I'm not watching those on a daily basis. Okay, I like to trade the leaders. That's just because better volume, better fills, bid and ask, and it's just, yeah, it works much better with fibs, with targets. Works, like if you look at a one standard deviation move, there's much easier, clean way you can, there are more steady stocks, like rotation works well. Like everything it's just works really good with these bigger companies. So, I mean, you can jump from one to another, but just then in the end is all about being right on that trade. So let's look at some movement images. Okay, let's do okay, this is a screen that you see every day. I don't have much time. This is a screen that you see every single day, okay? There's a lot of stuff in this screen, okay? I hide them because I want to have a clean look on a chart, okay? Because it has an option to show plot and can have 10,000 things on a chart. I don't want it, okay? But these are all running in the back, which is fine. So when I post, like I do a lot of screenshots every single day, shows you where the buy is, where the sell is, where we at, what you're looking for. Your job when you're going to look at this chart is you need to read the chart starting from here. Is the stock has a monthly bar higher or lower? In this case, it's higher. How's the week is going? Is it a week is up, meaning it has a higher weekly bar? Is it down, or is it an inside week? And then you just go with the day, how the day is going. Day is up, inside, outside, which is going to be engulfing, or inside. Daily time frame is 3 moving averages. Okay, 21, 50, and 200. You don't need to watch or track any other moving average on a daily time frame. When the price is above the 21, is going to be green. If it's going to be above 50, it's going to be green. If it's going to be above the 200, it's going to be a green. So those moving averages, you don't see them on a chart, okay, because I don't want them. This is exactly where the moving averages are sitting. So these are well-defined resistance level and they act as a support as well. This band right there, this is not some Ichimoku cloud or something, okay? This is a totally different thing. DTR. DTR is the daily true range. ATR is the average true range. Okay? Average true range on MSTR as of yesterday was 16.12, 16 points. Don't worry about the decimal point after that. $16 move. Okay. That was the average true range of an MSTR stock as of yesterday from the bell until the close. But yesterday, MSTR went up to 15 points, which means that it completed 95% of the expected move of an average true range. That's considered as I mean, you can call it a 1 standard deviation move. A 1 standard deviation move works from a mean reversion. Okay, those ones are the different. They're gonna be very close. Okay, they're gonna be like off by like a point, like a point or two, give or take. Okay, but they're have a same concept, but you don't call an ATR a 1 standard deviation move. Okay, you can combine them both when you combine. I already did them. When you combine them both, they're going to be very close to the same range, what you see it here. I much rather follow ATR over a 1 standard deviation or 2 standard deviation move. But the screen here is telling you everything. What is the expected move that you're looking for this stock for today? Are we gonna get to 100? Are we gonna exceed 100? Or are you gonna just make it to halfway? So we don't know that. Okay, we simply don't know. This is the 52 weeks midpoint, okay, and 52 weeks high and 52 weeks low. The 52 weeks high is 543 on this stock. The low is 102. The midpoint of 52 weeks is at 322. Okay, this is like so anytime we're looking for some stock that's sitting down here, and we're trying to see if the price can make a mean reversion over time, get to a midpoint of the 52 weeks. Most of the time, I would say like over 90% of the time, when the price does make a mean reversion, price goes right back to the mid mark of 52 weeks high and low. So this is all you're gonna see every single day. Okay, that's how you read a chart. So in this case right there, what you have here, the buy signal triggered here at 371. Okay, signal pops based on a close. There's no signal has ever built or can be written, okay, based on a working candle. Okay, it has to close the bar. Each bar has high, low, open, close. Okay, so that's what we call those. So you have high, low, open, close, right? So when this day ended, which was 7:24, right there in the bottom, 7:24. Okay, this is the daily time frame. This wasn't there at the end of the day. It waits for the next day to see how the bar is going to open. Is it going to have a higher bar or is it going to have a lower bar? In this case, right there was a higher bar. This is where the signal triggers here on the previous day bar, not on this one. Remember, signal triggers based on a closing bar, this was closed yesterday. This is still going. Now you looked at this signal right there. Okay, now you got a signal here, 371, meaning that you need, now what we need to do is we need to find entry between this high and this low of the previous day. I'm not worried about this, to find or get ourselves in this trade, okay, to go up. Where do we use a stop? Right there, to the previous day of the low of the bar. If the price from here go like this signal is no longer valid. Now, these are daily bars. Daily bars means that it's going to take a long time. Each day could be a higher bar, could be a doji, could be some sort of a spinning top, could be any kind of a candle. We don't know that, but I don't look at these. I know a few candles. I don't know all of them, but I simply look for higher bars, lower, inside, and outside bars. Okay, higher bar, higher bar, higher. No, this is the outside bar. So that's why I look at them. Okay, huge reversal back down here, as we all saw a couple days. A couple days ago. But the signal is valid. The screen says buy. We stay in a trade as long as it is valid. I define risk now on these ones. This way is to, when signal triggers, to take a previous day low. Either you take 1 day low or you take 2 days the most. You're not going to see any 3 days or 4 days wide. I don't want to take that kind of wild risk. Okay. This is how you're going to read this thing. This is a 200-day moving average, the green, the white one, but that doesn't matter. It's all here. You know exactly the prints are here. Okay. So read the chart right when you see one. You know, right away you look at up one thing. Is the month is up or down? Inside, fine. Has it made a new higher bar for the month? Is the week is up or down? Day is going up or down? Look at the 221 EMA. Look at a 50. Look at 200 where it's sitting. Are we trading above or are we trading below? Are we in between? Doesn't matter. When the price is going to be above, it's going to be green. If it's going to be down, it's going to be red. Okay, and look for the expected move. So if you have an expected move of yesterday of 16 points, but you're hoping for a 30-point move, I just don't understand the logic. You have a 6.5 hour window. It doesn't matter like when the stock actually gonna pop, but stock just opens. It takes almost like when stock opens when all the volume comes in for the first 45 minutes, half 45 minutes, stock is gonna try to make a move one way or another, and it kind of cools off after that. And then it could intraday can push up a little bit more, and then the lunch comes in and lunch break, and stock just literally just takes a, go go back into a sleeping mode. And then the last hour of trading, that's it. So this is what it is. Now the point is like, okay, well, what is our target? Our target is this, 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 and this. These are targets.
So Mo, can you clarify the fib levels of all those solid colored code and the dotted colored lines?
They're all here.
No, I mean the percentage. What is the fib percentage of each lines?
Oh, okay. So these are 100, 127, 16. No, sorry, 100, 161, 200, and 261.8. So these are those typical 3 versus 1 third wave fibs. So it's the same thing. So I'm not worried. I don't worry about those percentage swing. My targets are here. That's my price target. I trade price. We don't trade based on percentage or lines. When I'm
Yeah,
picking,
I understand, but it is important, what is the most likely, does it go all the way to
nobody knows.
261.8 in the day? No, right? So
Nobody knows that. We
yeah.
cannot predict. We don't know that.
And also green dotted line, is that the green dotted line and the red dotted line, are they previous week high low?
Yeah. No, these ones are, if it's a daily time, that's the month. That's the previous month high and low. So I change them around. Either I do weekly, I can go monthly, I can do hourly. So I can change them around. So on a bigger time frame, on a daily time frame, when I'm trading these signals, I try to keep on a monthly time frame. I use those monthly fibs. That gives me enough time because these are based on each bar is 1 day close. So I try to target these ones because, well, I try to see if we can keep making higher highs. So the thing is like the targets are once the triggers is this. That's your first target. Are we gonna get there? We don't know that. That's the game of probability that we play every single day. This is our second target. And this is third. Can we just get here and then we can just come back down? Of course we can. Anything is possible. Anything can happen. So if you take a trade, okay, get yourself in after this buy signal somewhere around here. You're not gonna get this. You have to, if you want to buy 370, you have to buy something deep in the money. Okay, not that deep. I would say like 60 delta or 65 deltas because you are right in this day and the buy signal triggers. Now you're just making a decision where I get myself in. Do you want to buy something at the money, or do you want to go a little bit in the money, buy yourself a 370 call? But if you buy, regardless, if you pay here, if you buy this low needs to hold, because if the price makes another lower low, this is no longer valid. You simply cut the trade out. No question asked. I don't even hesitate. Just cut it out. Move on to another one. This is the risk that you're willing to take from wherever you get filled of this previous day low. That's the loss. That's a stop loss. This is As soon as the price crosses below this line, this thing is going to disappear, meaning that this sell signal, which we triggered here, is still going. Okay, the low has to hold. That's what all the stuff is working behind the scenes. So from here, we're right here at a 437 as of yesterday. Okay, so that's our third target. Now the question is, can we back off? Sure, we can. Can we go back up to 455? That's a fourth target for this month. That's the plan. Now, as long as this signal is in, as we can see how much of an upside that we got so far, you have to ask yourself a question. You're willing to take this dip? Can you suffer this? Can you handle this? If you in a trade went all the way to your third target, you says like, well, no, I think that we're just gonna go up to here and here, and you don't want to sell anything. You just wanted to say like, okay, can I lock some gains when I'm at a third? I just hit my third target, or should I just leave it open? And you think like, yeah, we're gonna get to 455 when I get to 486. You don't know that. Neither do I. Because you can get one dip over here and you can get triggered to the sell signal. That can happen as well. But that sell signal is not going to trigger until you have a first initial lower bar, because that lower bar here is going to give you that stop loss like this. This sell signal didn't appear. This is a long dip down here, right? The sell signal triggered here. Look at the stops on the previous day high. I wouldn't take this trade. Look at how wide of a risk that I have to take now in order to short this sucker down. So you have to be careful. I don't jump on everything what I see either. So, the point is, I love to trade, but I'm not desperate to trade. Okay, because I know this thing for a fact that if I don't have a good signal today, I'm gonna find something tomorrow or the next day. I can wait a day or two. Nothing is gonna happen. Okay, price is working, everything is working. Something is gonna trigger, I'm gonna catch it. It's just a matter of, well, sitting on my hand for a day, like, well, I couldn't find anything, which is fine. I'm willing to wait. I have stuff working. If I want to be really busy looking at, oh, I don't have something new open, well, I can just look at my open positions, how they're doing. It's just a matter of like, if your focus is only on throwing trades one after another, I mean, that's a different approach. That's just taking risk after risk after risk. I don't want to do that. I try to keep around 15 trades a month. That's my typical kind of like average. Sometimes I go like 16, 17-ish kind of time. That's it. I'm not looking to trade 30 trades a month. Oh, hell no. I mean, that's a lot of risk that we're talking. But at the same time, that's the risk is defined. Now we can go back and scroll. I have a list on the.
Well, before you go, can you go back? Can you go back to MSTR? I have one question. MSTR. So, yeah, can you just clarify? The solid lines are weekly fib, or
on a
monthly
daily
fib?
time frame or monthly.
Oh, the solid and dotted line both.
That's the breakout of the last week high. That's the last week high of MSTR.
No, you said that it's a previous month high on the daily chart.
Correct. That's the last month high of an MSTR was 407.39.
And those solid lines are they weekly fibs or monthly fibs?
Monthly.
Okay.
Here.
So daily chart, we are looking at all those
407.39.
monthly levels.
Do you see this right there? 407.39. 407.39 was June high. The June low was 356.80. 407.39, 358.80. That's the monthly. Okay. So I just use these ones for a daily time frame. I don't use any percentage and stuff because I don't need them. I trade price. I want my target because that's I want to adjust my strike prices. My focus is from if something triggers, I want to get here to the green line first.
And can you zoom out a little bit? Zoom out. Zoom out the chart. And also, can you clarify the, yellow, purple, blue, yellow, red
those
line to
are
the downside? What are the fib levels for the downside? Those, yellow line between the green and red dotted line and the purple, blue, yellow, red. What are those fib
this one.
percentage? Yeah,
Same
yeah,
thing. 161.8, 200, 261.8.
yeah. But
Both up and down.
downside is it like a 27, 26.8 and 32 point something?
No, we're not. No,
50,
those are no, those are in between. These we're using fib extensions. We're
right?
looking for a breakout of a high and low, and we're using a
Yeah.
fib extension. Fib extensions are your 161.8, 200%, 261.8. Those are your typical 3 versus 1 fibs. So I'm using those ones.
Yeah, so can you
Fib
just
extensions and fib retracements are 2 different fibs.
oh, okay, so the downside yellow, what is the percentage?
This one,
No, from the top, above the one above yeah, that one.
this 78.6.
78.6. And then
Correct.
the purple below,
This one,
purple,
I don't see
one
purple.
above, one below,
Okay,
or
read,
pink.
show me a price. This price is right there. Which price?
345.66.
This one is 127 extension,
127, okay. And the blue,
161.8.
161.8.
Yeah,
Okay.
which is a 3
And
versus
then
1.
okay, and the yellow is 200.
Yeah,
And the red at the bottom is 261.8.
yeah, yeah. Those are your typical fib extensions.
Okay, okay. I just wanted to clarify.
There. Let's see. Here's your fib extension right there. So let's say you want to run a swing from this low to this high, projected from this. That's your fib extension right there. Now you took this low, this swing, this high, projected from this low, which is a higher low. That's your upside project. These are your because when you using a fib extension, you're projecting the upside. When you look in yourself an entry, you use retracements like these ones. So now you take this low to this high. Sorry, let's go from here. Now these are your retracements. We can just select them here. Because you're using, these are your retracement level. So when you break out, meaning that when you take out this high of the prior swing, you're projecting the upside now. That's all it is. Okay, well, you enter a trade. Okay, where are you gonna go? Just stay in. We have to set our targets, right? That's how we define our trade. We take in the risk. This is our upside target against this low that we're gonna use as a stop loss based on the buy signal. That's it. That's all it is. For here, you have to define your risk. How you're gonna play it, how much you're gonna risk, how much you're willing to lose if this thing goes and fails on me. These ones right there is the same concept. Okay. But we're using the same. This is the invalidation mark. So now let's say we go back here to this stock, REGN. I'm just going through this, okay? Buy signal triggered here. Here's your stop loss. Not even on this bar, was this bar. Huge pop. Signal triggered on this day, which was 610. But it appears on this bar as 6.9 against the 485. And then from here, you have to get yourself an entry. And now you're willing to take a risk now, because I try to get myself in as close as possible to the previous day. Okay, because more and more the price is gonna push higher, my risk is gonna increase more and more as well. Right? What can happen after a few days? Well, I don't know that. Some of them just go. Okay, some of them will take time. But nothing will instantly move right back up either, because you buying something so damn low. Because first of all, you're buying something where the swings are down. You're buying something when all the moving averages are down. Right now, in this case, is what? It is above 21 and 50, but is below the 200. 200 is right here at 683. Stock is trading at 267. So don't expect that you're trying to buy in a beat up stock that will just like, I'm going to buy myself something in, I'm going to risk like crazy, and it's going to instantly is going to start moving up. No, it will not. It's going to take time, because swing has to turn up. Okay. Look at you have to just look at like, okay, while I'm buying something, look at the hit the stock just took. But you think they're like, okay, well, this is one day. 2, 3, 4, 5. So you have 5 days from here, from this huge gap. Okay, the buy signal triggers here, and now you count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. It's been 22 days now. Okay, that you and these are daily bars. The point is what? Since this signal triggered on this day, which was 6.9, the price has not reversed below 485. And it's been going ever since. So this is, if you get self in here, got up, go back to the flat line, and then you finally made your way back up to green line, pink. That's the third target that you're trying to get to. This is the simple way that you can trade from now on. Because I mean, I hate to tell you all this, because the wave counts, the swing charts, they're all gonna end very soon. Okay. I think this, I mean, some people like to do this. I don't have to. I've spent enough time on and my life and my energy and on all these charts. I don't need to learn none of that stuff. I know enough. Okay. I just all the knowledge that I've gained, all the experience, all the practice trades, whatever that I took, I just merged everything together and just like, okay, I want to just turn everything into a one single chart. Put 5, 6, 7, 8 different conditions. Put everything that I know, put in one single chart. This is what it is. That's it. This is how I wanted to trade. It is fast, saves me a lot of time. I can move so fast, and I can just find trades where the condition is going to get met, signal triggers. I'm ready to take an action. Okay. I don't want to sit and fourth wave, fifth wave, or down in 2, or we're going up in 3. I don't have time for that. You wanna know where we at? Well, you can start doing Elliott waves, spend 10 hours a day for the next 6 months, then we'll talk. That's the way you're gonna learn. I don't need to learn anything. So I have the targets, when to take a shot, what to chase. If I get stopped out, fine. So far we had BRK Berkshire What's the ticker here? BRK. This trade. What's the ticker for this? Fast. Jeez, what is the B here? Yeah. So this was a trade that we took. We got stopped out, which is fine. You don't see him anymore. It was somewhere around here, I know. We got a bit of a pop here and then we reversed. The buy signal has gone. Why? Because the price made a lower low. So this was failed, and now look how much the price went down. See, that's why I exited the trade right away. I think I took like a $340 loss, which is fine. This was failed. Okay. And the one that we got this week, Workday, got hit with a downgrade. It was chopping around here for days, and I got hit with a downgrade. So the buy signal stop loss was right here, right there. And as soon as I got stopped, that's I'm out. Cut the trade. Imagine now sitting on that trade, it'll be down like over $1,000 right now. Okay, it's because we're using this previous day or two low as a as a stop loss. What's the other one? McDonald's we just did, laid out well, right? So we played this one this week. Triggered here, stop loss. But I've got myself in here, not here. So don't think that I just only rely on this all day. I have this working on the side as well. Okay, I'm going to show you what. Just to give you an example really quick. Let's pull up McDonald. I take double confirmation before I'm going to get myself in. Watch this. It's a McDonald chart. Now we're going to go back here. This signal right there triggered on 6:30, right there on the bottom on this daily bar, right? 6:30. The buy signal triggered here, got an upside, backed off from the 200-day moving average. My signal here on Optima triggered here at 290.96 on this day, which was July 8th. That one on the 30th. You see the difference? This was on the 30th. This one triggered here on the 8th. Remember when this triggered a couple days ago, I told us McDonald's going to pop. So we should get a higher bar the next day. And we got the higher bar. And then in the morning, the Workday got downgraded and McDonald's got upgraded. So it just, one got hit, but this one went our way. So, it's just that's just a part of trading. So the point is, like, I'm not relying on this thing all day. I'm watching other things. Okay, I have something here. I have hundreds of signals here that I look at them every single day, and I run scans on them. Okay, so just I use it as my content just to kind of like move fast, but I would only highly suggest and recommend you to just trade what I trade, because I don't paper trade. Okay, I risk my own money on each and every single trade. Okay, if I'm willing to lose, I'm okay with that. But we'll see the bigger picture. So what was the other one that we're doing? E-car. This is the one we're in right now. So we're in on this one.
Hi.
Still kind of to fighting this 200 EMA, again, went up to the green one, pink. So we hit basically three targets to the upside. This is not a very high flyer stock anyways. I mean, as you can see, the stock only moves like 2 points on average. Okay, it's a 2 point stock. So you don't look for a line, well, I'm expecting a 6 point move. Well, it's not in front of you. So don't get your hopes up. So we're in this one, kind of moving around, which is fine. Still have shares. Let this thing work. This one, Croc. This thing is just punishment, man. It's torture. This stock is just struggling really bad here, as you can see. See, got a bit of a spike, closed here, another test. Just keep failing on these spikes over and over again. You know, it's just, we'll see what happens. So, gotta be patient. As you buy a signal right there, in a trade, let the trade breathe, and see what happens. Okay. Um, is Tesla that triggered yesterday. Okay. So Tesla upside, we're gonna try to chase 356, 380, 409. If it's gonna go, it's gonna go. If it's not, then end the month, it's an inside month. So it needs to break one way or another. So we'll see what happens. 200, it is below 21, below 50. Now it's above the 200 as of yesterday. It's the first close it got yesterday after the previous 3 days. Right there. So all the closes are right below the 200. So it's kind of sitting around 200 now. So, okay. So we'll see how it goes. Stop loss 293.55, which we're gonna use the same one here on the wave count anyway. So right there, 293.55. That's what I put it here. I was like, if signal failed, so does uh this higher low, the 78.6 is gonna go as. Okay. So that's the risk on this one. Now, how do you define risk? What are you willing to trade? How much you willing to size up? Well, everybody has a different account. Okay. I'll tell you what I do. Okay. And you can decide what you are comfortable doing. Let's say I want to take this trade. Okay. My risk is 293. Price is at 313. Okay. I should have got myself in yesterday, but let's take an example. So we're gonna do, it's a different area. So we're gonna do is, let's see, 313. We wanted to go 356 and 380. That's gonna be the first target. I'm not looking that up because we don't have that big of a range to the upside, anyways. Okay. So we're looking at 356 and 380, meaning 360, 380, right? There's a 20-point spread to the upside. So these are daily things. So how would I structure the trade? Do I buy something at the money and then make a spread from three whatever that I'm buying and then just make a 360? So basically we're looking at what, 315 to 360 spread. So let's do that. So let's say we go out, doesn't matter how far you want to go out. Let's say you want to go out 315 to 360. Cost you 1,500 and, oh boy, that's a bunch of things. So this spread right there, so you did 315 and 360, cost you $15.83, is 15 delta play. Let's sort of move these. That's 15. So you bump it up, that's 31. So you have 30 deltas here, no theta, but you're going out so much far out on time. So you're just holding premiums. So you're just going to play with delta. Okay, you have zero theta basically. It's not going to cost you anything to hold the premiums. So you got 2 here. So what I do is basically, I'm just going to go here and I'm going to buy 50 shares and put it all together. Now I'm 81 long delta. If I want to go up to a 3, I can go up to 96 delta. So I can play around here. Okay. I'm not worried about these costs, what it will cost me. It's not costing me anything per day. Okay. Now you're long 96 deltas. Now you get yourself in here. Now you're using a stop loss at a what? $293.55. So $293.55, we can manually change it here. It's an $1,856 loss off a 95 delta play. You have to ask yourself this question. If this thing fails, are you comfortable losing this amount of money? I'm not going to make the decision for you. You have to make the decision for yourself. If you cannot handle that, reduce the delta. Okay, don't start with that 95, cut it down, go like this, 2 and 25. Okay, so now on 25, buy shares. Why is that? On every single you buy shares is because of this. You start the position with buying shares of either 25, either of 50 shares. That's what I do. Okay. Why? And you take the option trade. It doesn't matter. All you're trying to do, you split the order into 2 different ways. You have shares, you have options. So now from here, you long 56 deltas. So from 56, you go down to 393, you're going to lose $1,000. Can you afford to lose $1,000 on your shares and your position? But your total risk, well, on the stock is crazy, but on the option that you're taking a $3,066 that you're paying for the premium for 2 contract, plus this. So your premium is not going to go to 0, guaranteed, because you were using a stop loss. It's not going to go to 0 because you're only using a 1 previous day low as a stop loss anyways. If that thing buy signal disappears, you're not going to see him on the screen anyways. So you just get out of the trade. You have to define the risk to see, like, am I willing to lose $1,000? If you cannot lose $1,000, can you afford to lose $781 if you go 25 and 1? If you don't want to, you can do this thing as a 15. You can take this thing as a 2 contract here. Now you 45. You don't want to do 15. You can do 10. Down to 40. You just play with this against that low that you have. Now in this case, you have 40. Now say like, okay, well, I want to be 25. You can do that way as well. You buy 10, buy 1 contract, buy 10 contracts, 10 shares against 1. Now you're 25. It's not costing you any money anyways. So now if you're going to, this is taken at the price at the trade at the money. Now, if you're going to move the trade up because you're willing to go up to, target is this, which is 357. It's called 360. This high. Over time, it's going to take, it could take weeks. It's going to take another week and a half, 2, 3, 4. No, we don't know how fast the trade is going to move. That's the target. But I'm willing to take a start from here to here. because it's going to give me enough deltas on my trade. Now, if I want to go up to 360, change it back here to 360, then turn that thing into a 380. And now my cost is going to go down to $4.95. Now, $404.95 is going to give me only 5 deltas. Now I got to bump that trade up to 27. So why would you do that? Why would you do that? You bump in 30 deltas against $5 negative theta. Why don't you just buy something at the money? You can just have a 30 right there on one contract. So where do you think the stop loss on this one from here to here is going to be any different with the same delta? Okay, I gotta go. So you just have to define risk here. Okay, so you're better off going something at 315-ish, kind of 320, open up that thing, go back up to that 360 target that we have as a first target, and come down to either 1 or 2. There you go. You see, delta is going to move. Learn this. People get a panic attack. Oh, I'm paying $3,000 for it. Who cares if you're paying $3,000? If you can pay $3,000 for it, but you carry only 5 delta, what difference does it make? Your underlying is going to move based on a delta price anyways. You're not getting, your payout is going to be it's going to be the same based on what the delta that you're holding. So you adjust this. So you just have to, this is how you do it. So you just let these. So now in this case right there, so if you have 37, you can just go back to 1. Let's go 23. So now if the trade goes back down here to 293 right there, you're going to lose $500. Are you okay with that? And if you go from here to 360, your upside payout is $1,100. So in this case, what I do, okay, if the trade goes up, hit that 360 mark, I'm going to close this option trade. I'm going to close this one out. I'm going to book my profits on this one. Okay. And I'm going to leave the shares as is. Because every time when you have a buy signal, you're not going to have another buy. You're going to have a sell next. No buy goes to another buy. Buy goes to a sell. When the sell trigger is going to, but you already picked up shares here. Went all the way up here, cash out that option trade, leave the shares as is. If it's going to come back down, who cares? You already made money on that on the option side. As long as it doesn't get triggered, hit with a sell signal, fine, stay in a trade. Hold those 10 shares. You have a much lower entry. It can come down around here somewhere. What if it rebounds back up? Hold the shares. When you trigger another buy signal, then I buy another option. Leave the 10 as is, and you keep rolling that 1-1-2 contract of an option over and over again each month. It's the same thing I did here on the UNP, the trade we just played. Here, about 2 leaps, right? 240 a target hit. I got the trade. Now the price is at 235. Took this one. That's the mean reversion signal. Went all the way back up here, 241. I got out. I always buy shares. I have no worries about capital. 10, 15, 20, 25 shares is like a piece of cake. I'll buy instantly as soon as the buy signal triggers. Then from there, I'm going to adjust an option contract, either 1 or 2, and then we'll see how I want to compound a trade to see if I want to carry a 50 delta trade, I want to carry a 75 delta trade, I want to carry a 100 delta. I try to stay around 100 as possible. Am I willing to take $1,000 stop loss all day long? Can I lose $1,200, $1,300? Yes, I can. So that's the risk that 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 I take from this using these lows. But this is a little bit old now. I have much better stuff on the other side. We'll get to it one day. Try these ones for the next 6, 7 months. We'll see how it goes. Okay, I gotta go. Look, my wife started to. I gotta hop in, take a shower, get in a train. God, last time I went in a train was like, I don't know, probably like it's been 20 years, I believe.
Well, thank you, Mo.
You're
Enjoy
welcome.
Chicago.
I will, thank you. This.